Well, at the moment, the major focus seems to be on the rise in US bond prices, the potential tapering as we come into the end of the year, tapering being the slowing down of the quantitative easing in the US. That seems to be coinciding in Australia with us being at or very close to the bottom in the interest rate cycle. So we may see a move away from yield interest that's been the major focus over the last 12, 18 months, possibly into more growth situations, which is very interesting in Australia because obviously we have a large growth factor in the resources sector here. We've seen the small to mid-cap resources sector heavily sold. We think there's probably some very good value amongst certain names there, and that is probably going to spark corporate activity, which could see a significant inflow again into Aussie dollar terms. And we think that's where there might be the spark for some significant opportunities. The risk for Australia is in the big macro picture is clearly that either China slows down or has a dramatic impact for some reason, and B, the finance sector and the housing sector in Australia. If you get a sudden slowdown in housing prices or something to cause a dramatic fall in housing prices in Australia, you're going to see a dramatic impact on the financial sector here. Banks are a large part of the index, so they're the big risks to Australia.